Hey guys, so this is chapter 8 smart money tool, which is a very powerful topic. Okay, it is where you know when smart money actually create signals for buying and selling, right? Reversals, in simple words we can say. So now if you see the smart money tool, and now first question should be, what is actually smart money divergence or smart money tool? So basically it is a tool which is used by market makers to signal that reversals is in the operation. A reversal is in the operation. It means if they were buying, now we can see reversals towards sell side momentum. And if they were selling, we can see a reversal towards buy side momentum. Now how it works. Basically in that scenario, we look for correlated pairs. Example, GBP USD and Euro USD are either US 500 and US 100, are either some of other pairs like XAU USD and XAG USD, which is silver and gold, right? They are correlated with each other. Now, criteria to focus on is price must hit high time frame PD array. Either it is internal range or external range liquidity. Now, look for market structure shift with displacement and price retracement into either fair value gap, order block, or breaker block. Let's understand it through depiction. And now this is the example, right? If you see, prices touched that high time frame PD array, and then price swept out that low, right? But if you check another pair, you will be finding this low has not been swept yet. In another pair, you'll be find the structure shift. This is what we call smart money divergence. And when it happens, we will find reversals, right? But we should be waiting for a structure shift and then fair value gap or something, any PD array, right? So this is what we call smart money divergence. Let me show you the chart examples. So guys, this is the XAU USD, right? Price is touched into high time frame PD array, right? And this is the time window of the reversals, right? So I actually sometimes trade the AM session, right? So we will be marking out the 10 a.m., right? Because 10 a.m. is actually the London close timings. You don't need to actually complicate it. I will be teaching that model in upcoming sessions, right? So we will be marking out the low. When we wait for the reversals, we'll be watching the prices taking out the lows in one pair and another pair is not being taken out these lows, right? So now let's see how it plays out. This low has been swept in both, right? And then this low now, let's see, right, is still not swept. And in also this XAU pair, right? So now let's see how it plays out. So okay, good. So now if we see price took out the low, right? But in that time, in that pair, sorry, it has not been taken out, right? Let's see how it plays out. Okay, good. Okay, now we find it what? A structure shift there. Now this is where we should be actually adding our positions for buy program. Why? Because there is SMT divergence. In correlated pair, this low has not been taken out yet, and that low has been taken out. It means there is SMT divergence happened, right? So now let's just mark it out. SMT. All right, leave this. Okay, I'm just that is what we call SMT divergence. Let me show you another example. Now this is the another example, right? We will be marking out these lows, right? So this is the recent low, and also if we go into that chart, this is the recent low, right? So let's see how it plays out, because our next goal is this buy side liquidity, right? So let's see how it plays out. Okay, these both charts has took out these lows, right? And then if you see this low which has been taken out by XAU USD, right? And but silver, which is unable to take out the low, it means we can find a reversals now. Why? Because there is SMT divergence, right? If you see, let's see how it plays out. Okay, found a structure shift, then fair value gap. Here we found a breaker block, right? This is what we call the SMT divergence. Now our main focus should be on this buy side liquidity. Let's see how it plays out. Good. Okay. It's nice. Playing good. And then this breaker block, right? If we mark it out, let me just do it. This breaker or either this fair value gap, you can be entering from any of it, right? So now price is going to actually take out the buy side liquidity after this SMT divergence. But if you see, this mitigation block has been touched out and price is going up. This is what the SMT divergence looks like, right? It has been taken out.